Hola, ¿qué tal? Buenas tardes. Buenas tardes a todos. Mi nombre es Antonio Simontalero y os quería dar la bienvenida a este evento organizado por CFA Spain, en concreto por el Comité de Inversiones Alternativas. Hoy tenemos con nosotros a tres ponentes, grandes expertos en este tema y en este asset class tan interesante, con los que vamos a pasar la siguiente hora. Y bueno, antes de pasar la palabra a Tomás, que moderará la sesión, simplemente comentaros que hacemos todo esto gracias también al patrocinio de Aegon Asset Management y de Allianz Global Investors, que trabajan con nosotros y en concreto con el Comité de Activos Alternativos. La sesión se va a grabar y estará disponible para todos los miembros del CFA en la web y la vamos a hacer en inglés, puesto que Gianpaolo es italiano y consideramos hacerlo mejor todo en inglés. Y poco más por mi parte. Gracias a todos por apuntaros, por estar y seguro que es una sesión súper interesante. Y le paso la palabra a Tomás. Tomás, the floor is yours and we can start with the session. Thank you.
Perfect. Thank you very much, Antonio. Welcome, everyone. My name is Thomas Teixeira de Mota, and I lead CBRE Agribusiness Division in the south of Europe. I have the great pleasure to anchor the CFA Alternative Investment Series about a very passionate and hot topic at the moment, agriculture and forestry as a real asset class. So in reality, over the past 30 years, the farmland and timberland asset classes have grown substantially from niche investments to something approaching mainstream alternative asset classes status. Both asset classes exhibit stable cash flows and favorable diversification qualities, while their status as a real asset is attractive to investors at a time, especially now, of rising inflation. This is what brings us here today, demystify these new emerging asset classes. For that, we have two seasoned experts, which I'll introduce you shortly, today with us to talk about, on one side, forestry, on another one, farmland as an asset class. So very quickly on the agenda, we'll have 20 minutes dedicated to timberland, for which Gianpaolo, that I will introduce, will guide us through, and then 20 minutes for farmland with Juan Prados. And at the end, we have 10 minutes planned for Q&A, but we can extend if there's more questions, obviously. So with that said, let me introduce you to the speakers, to the two speakers of today. Gianpaolo Poccios is a seasoned professional with more than 30 years experience in the financial arena. He's operating in the investment management industry, specializing in private equity and alternative assets. He's the managing partner of Timberland Investment Resources Europe, a privately owned investment management partnership based in London with partners in the US, focused on the acquisition, management, and sale of forestry and related assets. Gianpaolo is also currently working as senior consultant for the World Bank and serving as a non-executive director on the board of a consulting firm focusing on alternative energy projects and the emerging markets. Gianpaolo will cover the forestry as an asset class. And then we have Juan Prados, also with us today. He's an expert not only in agriculture, but also in timber asset management. He's the founder and managing director at Generandi, a company which is very well known in Spain, involved in the agri and forestry value chain, from agriculture asset management to product trading in Europe. And they have currently a portfolio under management over 100 million US dollars. He's also the founder and managing director of a growing rural asset class portal in I think it's mostly based in Spain, called fincalista.com. With the introduction made and without further ado, I'll pass to Gianpaolo to walk us through the timberland as an asset class. Gianpaolo, the floor is yours. Gianpaolo, we cannot hear you. I think you're on mute.
Yes. Thank you. I'm sorry, Thomas. I hope you can hear me now. Okay. Good afternoon, everybody. First of all, thank you, CFA in Spain, for giving the opportunity to talk about the forestry and forestry-related investments. I am quite passionate about the whole sector and the whole asset class, so I will try to compress my presentation in 20 minutes, and if there is any other question left, we'll cover it during the quick Q&A session. First of all, let me try to put this in full screen mode, and I hope you can see it. So very quickly, we are Timberland Investment Resources is an asset manager. We're based in the US. I'm the partner responsible for the European office based in London. We are, when I say we specialize in forestry and forestry assets, and when I say forestry, I really mean land and trees. So I like to tell investors that we are not an investor in the private equity market. We do not buy companies that are part of the wood sector. We are not a broker of land or broker of trees. We simply buy land with or without trees on top. We perform an agricultural activity on top of these properties. Every year we cut a very small amount of mature trees, enough to produce and generate a cash yield to repay the investors. And at the end of the investment period, 10, 15, 20 years, whatever the product and the structure underlying requires, we sell the properties, we sell the land, we sell the trees on top, and we return capital to the investors. So a very simple, basic agricultural activity focused on managing forestry assets. So from a financial perspective, it's probably as boring as it can get. No financial engineering attached to this, just plain vanilla. Who are our investors? Our investors tends to be insurance companies, public and private pension funds, and family office endowments, and private, the occasional ultra high net worth individual. In my mind, the investors tend to be investors who have long-term assets. They're looking for a long-term liabilities. They're looking for a long-term asset to manage these liabilities, to match these liabilities. But at the same time, they are looking for an asset class that has a low degree of correlation with the financial markets. My joke is the trees don't read the FT, and they produce it, but they don't read it. And they have a high component of predictability of cash yield over time, and also have a high degree of inflation hedge characteristics. We manage at the moment about 2.3 billion US dollars in AUM. That basically equates to about 1.1 million acres of land, on which we grow about 260 to 170 million trees. 160 millions are pine or conifer, which is probably the most common and widely used and more versatile tree in the wood industry. And the remaining 100 millions are a mix of a little bit of everything, from fast growing, fast rotating trees like eucalyptus all the way up the chain to oak and very valuable long rotation trees like cherries and oaks. So a little bit of everything, a very highly diversified portfolio. We are 55 people. We are vertically integrated, which means that we have inside the firm all the functions, not only of the asset management, on the asset management side, but also on the forestry management side. We do that from 7 satellite offices scattered across the United States. We started doing this in the middle of 1980s, and we used to be part of a bank, Wachovia Bank, which is a supranational bank, regional bank in the US based out of Charlotte. In 2000, the bank was bought by Wells Fargo, and we did the classic management buyout. So using a private equity lingo, the partners have more than 35 years of experience in this asset class. The company has basically 22 years of independent, certified, audited track record. This is a little bit the background. We are, of course, certified, and we manage our properties in an ethical, sustainable way. I will not cover much of this because this could go on for probably an hour on its own merit. But clearly in this day and age, you cannot be a player in the timber and the forestry space without being sensitive to all the ESG components and being certified under the various protocols and initiatives around our asset class. This is a little bit as a background, just to give you a very quick snapshot. What I like to remind investors, as I said, we are not traders, we're not broker, this is not a speculation on land. Between 60 to 70% of the return, of financial returns, comes from the biological growth of the tree. You plant the tree over time becomes more valuable, and becomes more valuable for basically 2 reasons. One is very intuitive. It grows, it becomes taller, bigger, wider, and it weighs more, there's more wood, and it grows in value. But the second reason is because once this tree passes this magic number of about 30 centimeters in diameter, give or take, you can basically run this tree through an industrial sawmill, and this log will have access to all the intermediate and final wood products. So before the 30 centimeters diameter, there's not much you can do with the tree. You can either burn it and generate biomass, or you can use it in the pulp and paper and cellulose industry. But beyond the 30 centimeters, this world of intermediate and finite product explodes. So all this translates from a financial perspective. The value of the tree over time is not linear, but is the typical J curve. At the beginning, the tree is negative. You have to plant the seedling, water, fertilizer. You have all kinds of costs. As it grows, it slowly becomes neutral, positive, break even, and then it becomes positive. To give you an idea, in the US, a 10, 15-year-old tree, pine, below the 30 centimeter sort of diameter is worth between $15 and $18 a ton. Once it goes beyond the 30 to 35 centimeters, the same tree is worth $40 to $50 a ton. So basically, almost three times as valuable. In these slides, you can see some of the examples. So I said 60 to 70% of the return are generated by the biological growth of the tree. The remaining 40% is a mix of the value of the land, which of course you have acquired as part of your investment, and then additional sources of return, which we have put here: recreation leases, carbon credits, mineral and energy mitigation, returns and wind and solar. So a combination of managing the land, good agricultural activity, and trying to extract every possible value from basically 1.2 million acres of land that you have under management. Value very quickly, softwood are basically conifers. They're used for structural lumber, all kind of construction, packaging. Hardwood are basically flower generating trees, maple, oak, and beech, more high value. Rotation on the softwood, anywhere between 7 all the way to 30 years. Rotation hardwood, north of 50 all the way to 100, depending on the species and depending where you are in the world. So what are the three key drivers to why you should consider looking at timberland? The first one is diversification. I mean, this of course is in Europe at least is a new asset class. It's very popular in the northern part of Europe, the Germanic world, and of course the Swedes and the Finn and the Nordic countries have been investing in timberland for a long time. But this is becoming recently only part of the sort of the portfolio allocation of sophisticated institutional investors across Europe. The key message here I want to give you is this is typically an equity-only asset class. So the returns I've been talking about are not levered, and the investors generally book in their investment in forestry within the real estate and alternative portfolio. And because it's an equity only asset class, it will basically produce good returns, but critically, it will lower the risk profile of their investments. Capital preservation, as I said, is a key driver in this asset class. When you buy a property, a forestry property, 50% of your investment is represented by the land. So if you leave aside catastrophic events that could happen on the trees, on the forest above the land is a big mitigation factor and a risk mitigation factor, and represents a big chunk of your investment. It's not the productive part of it. The land value is recognized at exit, so it's an IRR component, while the trees are really generating the operational side of the cash yield. As I said, one of the biggest driver in this time and in these days is the inflation hedge capability. As usual, as all the tangible assets, it has a very strong correlation. With prices go up, interest rates are going up, the value of timberland and the value of timber and the value of your investment is going up as well. And this is a slide to show the correlation. Actually, interesting enough, as I said, this is actually quite competitive asset class, and especially when you look at it against real estate and against the S&P 500. By the way, these are U.S. indices, so I don't know the reality across Europe. But these have been the performance. So quite good returns over time, and very predictable in terms of the performance over time. Even during the financial crisis in 2007, 2008, the performance of timber was basically flat, but it never went negative. And I think there's no big secret. I mean, the fact that we don't have debt is a big component and is big help in that. And also this ability of generating cash yield in terms of predictable ways is extremely well received by the investors. This is a particular slide in terms of saying we focus our portfolio of 1.2 billion acres is focused predominantly in the US, across the United States. There are lots of reasons why this is the fact. Most of it, to be honest, is sovereign risk or the perception of sovereign risk from institutional investors. They don't want to deal with Brazilian risk or Latin American risk in general, or Southeast Asia risk, or Eastern European risk for that matter. So within the United States, one of the most productive areas where to invest is the Southeast of the United States. People always think of it as the West Coast, but in reality, the West Coast is a block. There are blocks, large blocks of forestry are owned by the U.S. government, and they're part of the state parks, and they're managed by the government. You're not allowed to invest in those areas. So the U.S. South still remains probably one of the most productive and one of the most high return area and geography across the United States. So what do? We basically buy the land, we grow the trees, we generate a cash yield on an annual basis. Whatever tree we cut, we replant, and then at the end of the period, we return capital. We sell the property, we return capital to the investor. Basically, this is done in three ways. You buy properties well. You try to find properties that are suitable for our kind of activities. You try to find properties in what we call the middle market of forestry, anywhere between $20 to $60 million. You try to manage them in a very sort of suitable, ethical, and professional way and productive way. You try to mitigate risk by adding not only diversification across your portfolio, but also diversification across the property. So you're having different species, different age group that will mitigate the risk across your portfolio. And then you basically try to find any other potential return linked to your property that will add on to the basic underlying forestry returns. So this is just simply to summarize. We focus on inefficiencies. We try to find properties that are not managed by our competitors, for example. The example that I always say I use is the real estate one. If you give me $100 million, I can do two things. I can buy a big building and put it up for rent and generate cash yield from that, or I can buy 10 apartments. Our strategy is basically the latter. We buy smaller properties across the United States in different markets, different species of trees, and we consolidate these properties in larger portfolios, segregated, and we manage those on behalf of our clients. So we buy well, then we give the properties and the portfolio to our foresters. I mentioned it, they're in-house. They manage the property, we manage the property ourselves. They implement good state-of-the-art agricultural techniques and biometric research, new trees, new genetics. They plant the trees, they move forward, they generate returns. At the end of the period, we sell the properties and we maximize the return for our investment, for our investors. This is basically, to summarize a little bit, the drivers that I mentioned to you. So first of all, you have the organic growth of the tree. You have the land that contributes 20 to 30% to your investment. And then you have this whole sort of non-traditional sort of pool of returns attached to the management of your property. Basically, fundamentally, carbon credit, carbon offsets, renewable energy, conservation resources, environmental mitigation banking resources. Basically, these are funds that the government gives you to manage the forestry and to maintain the forestry in an ethical, sustainable way. Sawmill and infrastructure resources. I just wanted to give you an idea. You can look at your at the numbers on your own, but the idea here is to show you this is a first European fund. And when I say European fund, is a fund that we launched about 6 years ago for non-US taxpayers, so for European investors. But the fund still deploys capital in the US. And this is a graphic, basically, sort of chart that shows you, this is about, Fund 1 is about $130 million. And then it shows you basically the span of property that the fund manages. So you go from Northern Virginia all the way to East Texas, going through North Carolina, South Carolina, Georgia, Florida, Mobile, Alabama, and so on. So you have a wide range of markets, a wide range of geographical diversification within the fund itself. The second fund that we launched 2 years ago, you can look at your numbers, that's a $200 million $200 million fund. It has basically, it's 90% invested. It has reached $190 million out of the 200. The last 10 millions, of course, are always the most difficult one to invest. But this has a same kind of sort of diversification, a little bit more concentration in the Southeast, but we're looking out now at the Northeast, and we're looking at properties also in the Northwest as well. This is it for me. Thank you very much for your attention. I'm looking forward to have your questions. Thomas?
Thank you, Gianpaolo. Juan, do you want to proceed with agriculture?
Let me unmute here and share again. Okay, can you see the screen now?
Yes, we can.
Okay. Okay, so thanks for your previous presentation, Thomas. As you mentioned, I'm Juan Prados. I'm founder and CEO of Generandi, that it's a company present in the timber and agri value chain. So we start managing assets, these two asset classes in Iberia for institutional investors, family offices, and direct investment. We manage the whole process from identifying, purchasing, and managing the asset until the final sale. But we also participate downstream on the sale of the production. In agribusiness, we're mainly on organic agriculture, organic food, and in timber, we are the largest importer of wood chips into the European Union in cooperation with the Sumitomo Corporation from Japan with over 850,000 tons. So after saying that, let me run through my deck of slides. Some months ago, a couple persons from CFA asked me to talk about agri-investing in Europe, and I pretend to cover this through blocks. So I would try to frame the asset class and discuss with you a little bit what are the drivers, zoom in a little bit into Iberia, and then summarize with some takeaways for you. So let me jump into the first block. So traditionally, agri-asset class has been considered just the land and the improvement that were needed for the production of crops or the production of livestock. However, today, this asset class is getting to be quite a broad asset class as ag in general. And in this slide here, you can see how it's normally structured. So we have mainly three blocks, that it's the upstream, midstream, and downstream. And in the bottom line, you see the different type of money that is coming into the asset class. So mainly 5 types of investment strategy. We have venture capital, we have private equity, impact investing, real estate, and debt. Normally, in upstream, we divide into the inputs and the production. Production, it's the cornerstone of this asset class, and traditionally covers row crops. This means mainly annual crops like wheat, corn, soy, etc. Permanent crops that are normally identified as trees or shrubs that are stay on the land for several years. Specialty crops like berries, like tropical fruit, and other type of specialties. Everything related to livestock, aquaculture, and indoor ag. In midstream, we mainly divide into infrastructure and manufacturing, and then we have downstream with everything related with consumption. So who is investing in this asset class? We mainly see that the size of this asset class, the assets under management, the last statistic, it's from 2019, and it's over 131 US billion, and is aggregated through more than 700 investors. Most of these investors are asset managers like our company, but we also find other investors like accelerators, direct business investments, family offices, and different type of funds and other institutional money. The asset class, I think this is another important takeaway. It's quite global. So on this slide here, you see that in yellow, the yellow dots, that investors are mainly headquartered in North America and Europe. North America accounts for 50% of these investors and Europe for 22%. So around 3/4 of the money is headquarters in these two regions. But investments in blue are quite global. However, also North America and Europe are the main areas of investments. Latin America and Australia are rapidly growing, mainly because of the good opportunities and large size of the assets, despite obviously other risks that you find. The size of the investors, it's mainly concentrated in the under 250 million. However, this grows all the way up to even over 5 billion in asset class, in assets under management, but only this is less than 1% of the investors. Top 15 investors are ranked here. So you see companies like Nuveen, like Hancock, PSP, and other large investors. Only one European large investor, Adecoagro, it's on the top 15. And if we analyze this from a hectare perspective, Australia and Latin America take the lead, mainly because of the lower value of the assets. So that would be the first block, and let me here summarize what it's the main asset class drivers. And by far, there's one driver, and it's food security. We have a growing population that it will soon reach 8 billion people. By 2015, it's expected to grow even additional 2 billion. Only one of them would be in Africa, and the demand for food would grow in around 60%. If we compare this growing population in dark blue here on this slide with the arable land, that it's almost a constant. It's difficult to increase the arable land in the world. We see that in light blue that the arable land per person is constantly decreasing. So the question is, why are we not starving? And the main answer to this is that, surprisingly, to probably some of you, ag is a technology-driven asset class. In this chart, this is a traditional example or way to illustrate this, compares the yield or the productivity per hectare of corn production in the US. Statistics were started to be measured in the US in the 1860s. And as you can see here in yellow, it remained rather constant until the 30s, where the first inflection or first miracle, corn miracle they called, happened. And this is mainly caused by the use of double cross hybrids of this crop. Then in the 60s, second miracle happened, mainly the improvement in genetics, the potential of using seeds and genetics to water stress tolerance or diseases, the use of fertilizers, chemical pesticides, and mechanization improved quite significantly the yield per hectare. So at the end, in more or less, or since the 60s, we see that the productivity per hectare has almost multiplied by 8 or 9 times. So the asset class at the end is providing investors with good returns. On this chart, quite similar to what Gianpaolo showed. If we had invested 1,000 US in 1991 in Agri, we would now have around 22K in our account. And it has overperformed other asset classes like real estate, stocks, bonds, or gold, mainly because of the combination of the returns generated by the crops, but also because of the valuation of the land that, as in timber, it has remained rather stable throughout the years. But another important value about this asset class is that the returns have low uncertainty. On this graph here or chart, we compare the standard deviation of different asset classes measured as the deviation from the expected return. And we see that agriculture, measured also by NCRIF, it's overperforming real estate, gold, or different type of equities. Obviously has less deviation than bonds, while it has a higher annual returns throughout history. As I said, returns come both from the returns provided by the crop, but also by the increased value of land. Here we see a historical trend in the US of these two concepts. As it happens with forestry, it's also a good asset class as there's no correlation between the value of the asset and the performance of the asset and the inflation. Here we see the example in the US. We will see later how it's performing in Spain. And to finalize on the key drivers, maybe a couple of highlights on the risks that we as an asset manager try to cover for our investors. We see 4 main blocks. So it's risk related to production, risk related to market, institutional risk, and workforce risk. Production or yield risk are mainly raised because of weather, pest, or diseases. So to cover this risk, the main strategies are normally the good adaptation of the crop, a better management, good use of water, and big data. Market risk, we mainly recommend our investors to invest in crops that are in solid markets, euro or US dollar nominated, and to make the right crop diversification and ESG alignment with their internal objectives. Institutional risk, it's a key driver in the sector. As you know, the farm to fork strategy has been launched by the European Union, setting important targets, mainly to reduce the use of pesticides and fertilizers and the increase of organic land. But also water management legislation and framework, it's very important to follow in this agri asset class. Finally, for workforce risk is a key factor to take into account because of the high demand of workforce and the possibility to mechanize these crops. It's very important. So what's going on in Iberia? Maybe to illustrate Iberia a little bit on this slide, on the left side, you can see that the European Union total output of agri-industry, it's accounting for around 418 billion euro. More or less 50% of that is coming out from crops and 40% from livestock and around 8 to 9% from services. The chart in Spain is quite similar. However, crop, it's increased compared to the global European value. Livestock, it's quite constant, and on a percentage basis, services are lower than in Europe. The total output in Spain, it's around 55 billion, so more or less accounting for 13% of the total European output. So one of the strongest agri economies in Europe. From this, I would say, quantitative analysis, we can zoom in a little bit and understand that, and sometimes I make the similarity that we should understand Spain a little bit, or Iberia, sorry, as the European California. Okay, we are leaders in the production of most valuable crops like selected fruits, vegetables, livestock, or olives, as you can imagine. And the main reason of this is because the possibility to grow crops in Iberia, it's by far the largest in all Europe, maybe comparable to Italy, but access to land, it's completely different. So at the end, what we have here, it's land availability, we have sun, and we have water to grow our crops. As I mentioned, organic certification or accreditation is a must that we should incorporate in our portfolios. Spain is leading the total hectares in Europe on certified hectares. I think with pesticides and water, I think it's one of the key elements to highlight from agri-investments in Iberia. This crop diversification that we find in Iberia is leading to Spain to have, I would say, the broader price range that we see in the market. Here we compare land prices of different countries. We see that in Spain has the most expensive hectares in all Europe, over 130 to over 140,000 euros per hectare for banana crops in the Canary Islands, and then as low as single digit in 1,000 single digits for a non-irrigated land in continental Spain. However, it's important that you understand that the sweet spot to invest in this asset class in Iberia is the irrigated land that we find both in Spain and Portugal. Prices for irrigated land have been growing over the years, have been also performing quite well in historical crisis, and it's an asset class that it's quite large and liquid. Here we see the historical trend on properties purchased throughout the years. So last year was record with almost 160,000 properties bought and sold in Spain. And if we compare this value here in the brownish color here on the lower part, that would be the agri, with the urban or real estate value, we see that on one side, the rural properties are performing much better on crisis. So here, after Lehman crash, agribusiness overperformed rural, and even on COVID, when urban properties market was reduced, it's even picking up, or was already picked up in 2021. So we see here on this brown line that at the end, agri farmland, it's gaining market share compared with urban land. As mentioned before, there's no correlation between this asset class and CPI, and it has less volatility than real estate. On red here, you see the performance or the value of just the land, not the performance of the asset class, just the value of the land compared with urban land. In red, it's less volatile, and normally the lower values are shorter, or the cycles, negative cycles are shorter than in urban land. Another of the drivers, as I mentioned before, is everything related to pesticides. On this chart here, it shows how most of the European countries are trying to reach their target to reduce by 50% the use of pesticides. Spain and Portugal are both performing quite well, and it's expected that we reach this target by 2030. The chart is just comparing the index year of 2011 to the last statistics that it's from 2018. In parallel to pesticides, the use of water is another key issue. And as we can see from the sector, we're getting to be more and more efficient on the use of water. Here in red, you see how the irrigated land has been constantly increasing in Spain for the last year. And in blue, the total use of water by the sector has remained rather constant. That what shows a much more efficient use of water per hectare. And another important aspect, I think, is to understand that this asset class, it will speed up in the coming years. Over 58%, so 60% of the property owners in Spain are over 55 years. So this means that 60% of the properties in the next 10 or 15 years will change ownership, either to inside their family or to institutional investors or other type of corporations. Only 11% are considered to be young. This means less than 40 years. And another quite common aspect is that there's very little training and a big lack of professional management in this asset class, as you can see here on this chart. I would say the lower brown here, the middle tone brown, it's showing that most of the farms in all the countries in Europe are mainly run or by families, by their own family. Surprisingly, it's an asset that it's offering gender opportunities. The last statistics show how almost all agri, except logging, is attracting more women than men. Probably driven in some cases because of the lack of workforce, as I mentioned before. And finally, as final driver, I would say, or key aspect in Spain would be to highlight the importance of technology in the sector. On the left side, you see how the investment, the food tech investment in Europe has multiplied by 3 in 2021 compared to 2020, so reaching around 9.5 billion euro investment. And there's a quite healthy ecosystem in Spain, mainly led by Andalusia, Catalonia, and Madrid, on developing startups related to the agtech. So what are the takeaways for today that I would like to highlight? First of all is ag, it's not a new asset class. There have been institutional investments for over decades. Food security, it's the main driver for this asset class, for investing in this asset class, and it's well supported by good technology. Global asset under management are quite substantial, so over 131 billion, as I mentioned before. And it's a good asset class to have in your portfolio or to diversify your portfolio, because mainly of the good returns that are coming both from returns of the crop, but also the increase of value of the land. And inflation hedge, as mentioned during the conversation, It's obviously another takeaway. And finally, I think it's important that we all remember that it's not only farmland, this asset class. There are many other type of investments that should be or are covered under this asset class. So I hope this has helped a little bit to understand better the agri asset class. Here you have my contact details, and I'm open to Q&A, Thomas, whenever you want.
Sure, Juan. Thank you very much for the detailed presentation. I hope it was helpful for everyone. It was definitely helpful for me. We have now 8 minutes or more if you want of Q&A. Feel free to drop me or to drop in the chat your questions. I actually have a first one. Both Gianpaolo and Juan, you mentioned or you made a reference to the NCREIF. And my question is, if we compare both asset classes, how much are they correlated? And which of them has historically better risk return on average?
Okay, I will talk about the timberland portion. I left Juan talk about the ag and the timber in Spain. So the NCREIF, which stands for National Council of Real Estate Investment Fiduciaries, is really the body, is a non-profit body who basically generates the indexes for both timberland and agri, as well as real estate and all kind of other asset classes. It is the recognized index for our asset class. It gives a good indication of the performance. It has been evolving over time. It changed in 2012. The last time it was tweaked to include performance fees and all kind of fees that the manager takes, so that basically give a more accurate snapshot of the performance. The pros of this index is it gives a very good idea of the time-weighted returns for the domestic, and I stress that this is a domestic U.S. Timber investments on a pre-tax basis. The cons, are basically it's a small subset of investors. It captures only institutional investors. About 12. The last time I looked at, there were only 12 entities reporting into the index. One of which was us. It encompasses a large portion of the domestic U.S. investment, but nevertheless is only linked to institutional investors. The other big drawback, and I think this is also common to ag, is that you have to remember that both timber and agri are not homogeneous asset classes. There is a lot of sub classes underneath. There are concentration investments. You can focus on fast-growing trees. You can focus on long rotation trees. You can have a strategy of cash yield. You can have a total return strategy with no cash yield at all. So there are all kind of ways to manage forestry, and this, unfortunately, the index does not capture this sort of subtleties. Having said that, Thomas, I think ag is a lot more cyclical, at least the way I look at it. So it depends on the time frame that you pick. In the past, in the 80s in particular, in the 90s, ag has outperformed timberland. Then we had a moment in the 2010 where actually timberland and ag were the same sort of giving the same kind of returns. We are now back at a situation where ag is a little bit higher in terms of cash yield in particular. But overall, it's basically the two asset class are very comparable, and both of them have a natural fit into a portfolio allocation.
Perfect, Gianpaolo. I think that's very clear. We have one question for Juan concerning the Spanish market profitability. What kind of IRR you'd see in a project? And Fernando is saying that if you take 2% as cash yield, land lease, plus let's say 3 to 4% of land appreciation, we would get a maximum of 5 to 6%. Is that the way to look at it, or what's your view on that?
Yeah, I mean, it's complicated to summarize this in a few minutes. We would need another session just to talk about this, because the diversification of the crops, I think it's huge. So we can find from non-irrigated to irrigated land, we find greenhousing, indoor housing. So it's quite broad. I'm not trying to avoid the question, so I will try to answer that in that sweet spot that I was mentioning before. So I would say irrigated land, that it's where I understand investors should come first. I think returns may vary from 7 to the low double digits, so maybe around 12%, maybe higher non-leveraged returns. However, investors have different type of strategies. So depending on the risk and on the length of their investments, you might find people looking to invest in, I would say, more secure, with more secure strategies, like a typical sale and leaseback that it's quite frequent in the sector, to others that go more to, and those would be in the lower range that I mentioned, or those that go to the greenfield projects that would obviously demand higher returns. That's, I hope I answered that. Yeah.
Fernando, do you have any follow-up question, or was that clear?
Yeah, it's clear. Many thanks to both of you.
Thank you. And you also have the Gianpaolo answer on the chat, more on the US reality.
Yeah,
we have another.
No worries. Yeah, I have seen the American, the US data, but there's not much data about the Spanish market, because there's not like an index like an array in the United States. So I went through the Bank of Spain data and the Encuesta Agraria. So that's why I asked about the average or the mean profitability of the projects. But
yeah, there's no index. It's something that some of the asset managers we are discussing if we should try to build something similar. But you need, I would say, a big, I would say, a quite liquid market to have a strong number behind that. Probably the only, I would say, official number that you can get, it's the value of the land. But it's a quite poor value, and it's not capturing the whole picture. It's only capturing half of the business. So yeah, unfortunately, we don't have anything like that in Spain or Portugal, or any country in Europe.
No worries. Many thanks.
When David is asking, what type of transactions are you seeing in Spain? Type of agribusiness acquired, deal size, type of investment strategy, and so on.
Yeah, so I would say maybe you could also answer this one, Thomas, because you're
very well, and I will complement.
Yeah, but I think that now we have most of the investors trying to concentrate in, I would say, permanent crops. That would be, I would say, the most demanded type of asset. So this means normally olive trees, nut trees like almond, walnut, pistachio, and some stone fruit. That would be the most demanded typical institutional money coming into Spain and Portugal. However, we see a quite dynamic market also in downstream. We've seen in this couple last year quite large operations on the industry, mainly on the citrus. It seems that a large operation on berries might be coming in the next months out. So I think the whole sector is moving, but this would be, I think, the most demanded type of asset now.
And just to add on what Juan just said, I think there's a whole bunch of new investors getting in the market. Both the traditional real estate investors that are now looking at an alternative asset as agribusiness, but also international players investing in agriculture in other regions, especially in the US and Australia. Now, more recently, also looking at Spain. So there's a lot of new investors coming in. What honestly 90% of them are looking for is land with water. So water is the critical aspect on the land for several reasons, but this will also take us a 2 hours discussion, but that's mostly what we've seen is water for permanent crops. Obviously there's other type of investment, but that's the most common currently. So I think no more questions on the chat. Anyone, if anyone has a question and wants to jump in, very happy to. Otherwise, we can close the session here.
Thomas, I got some inquiries about the material. Is CFA circulating the presentations and all the data?
I'll let Antonio answer this one.
Yes, it depends of the speakers. If you want to share the presentation, we will forward it. If not, no.
You have taped us. We are on record, so I don't think there's any problem in sharing the presentations.
Yeah.
Perfect. I think that's it. So we'll share the presentations. Gianpaolo and Juan, thank you very much for the time and for the presentations. Thank you everyone for assisting.
Thank you very much.
Thank you for the invitation. Take care.
Thank you. It was a great presentation. Thank you very much.
Thank you.